In the metals quadrant, taking a look at the June gold futures contract, 1759.40 was up 1.02%. So a little bit over 1% on the high side of things. On the low side, 1733.60, that was down 42 basis points. And we do have a breakout today in gold. Gold has a double bottom on the daily chart. Now, I don't want to bore you guys with technicals, but it's calling for prices above around 1800. It's not 100% sure that that'll happen, but the close that we got above 1755 today, and we did close actually above 1756, up about 85 basis points or so, that's calling for that move. Now, gold is now up 4 of the last 6 sessions, 3 of the last 5 weeks, and going back to August, 7 of the last 8 months. If we finished April higher, which so far we're up 2.38%, it's still early, we would be up down 8 of the last 9 months. April would be the first up month since 4 months ago. So it's a pretty strong breakout in the short term for gold. Rates are falling, and lower rates will call for more inflation hedges. We actually have yields in the U.S. Treasuries falling. You remember being above 177 last week in the Treasuries. The 10-year note, we're down around 163 now. The 30-year had gone all the way up to 248. It's at 232 now. Those lower yields put pressure on those that believe in inflation to find a hedge. When you have higher yields, inflation is less of a threat because the higher yields could slow inflation down, plus you're getting more on your money. Money that's just sitting idle, earning low interest rates is not a hedge on inflation, so people start to look for those hedges. Gold fits that bill. So that could explain some of the demand and the fact that volume has been higher on up moves than it has been on down moves over the last 5 or 6 sessions. That looks like people looking for inflation hedges given all the stimulus we have. And lastly, the dollar, which has a traditional inverse relationship to gold, is down again, and it's having its second worst day for the month of April. April 5th was worse, but not by much. Prior to that, you have to go all the way back to March 17th to see a worse day for the dollar. The dollar seems to, at least in the short trend, be accelerating to the downside, which is also a tailwind for gold.